welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly, your queries during the show. Please keep commenting on our live feed and we'll have your questions addressed by our guest on the show. But before bringing him on board, let's see what the global handover looks like. Europe markets closed mixed yesterday. Stock 600 closed fractionally above the flat line. CAC and FTSE ended higher, while DAX ended flat with a negative bias. Wall Street futures trade flat after the Dow Jones and the S&P 500 slipped from a gap-up start to close largely flat, while the tech-heavy Nasdaq underperforms with losses of about 0.5%. Stocks in the Asia-Pacific trade mixed, while the Nikkei outperforms with gains of over 2% after being closed for Thursday straight. SGX Nifty indicates a flat start to the Indian market. Stocks in the spotlight today: Aurobindo Pharma, Apollo Hospitals, Balaji Amines and Sterling & Wilson. And why affordable housing finance companies seem expensive to investors, we discuss on the show. All right, let's get going and bring on board our guest for today, Ashish Chaturmohta from JM Financial. Good morning and thank you for joining in. What does the trade setup tell you right now? It's been a largely mixed cues coming in from world over overnight. Markets in Asia Pacific also mixed once again. SGX is flat. So tell us what lies ahead.
Hi, good morning, Karunya. So thanks for inviting me on this show. So as far as, broad trend in the market is concerned, we have seen a very strong, rally in the market, and we made a low of close to 15,200. And now, we have crossed an important resistance zone of 17,400 to 500 kind of trajectory. If you look at in the immediate short term, the way, the options data is indicating clearly around 17,400, 17,500, there is a lot of, put writing, which is there in the market. So which gives us a sense that in the short term, 17,400 to 500 is going to be a strong support zone for the market. And if you look at index contributors, then I think banking and financials contribute close to 30% and above to the overall weight of the index. And there we are witnessing a very strong, strength in stocks like HDFC Bank, HDFC Limited, ICICI Bank, Axis Bank, and then some of the NBFCs like Bajaj Finance. So clearly, this sectoral weight and the strength in the sector clearly indicates that banking and financial is going to contribute significantly to the uptrend of the market. And then we have Reliance, which is close to 10 to 12% kind of weight in the index, and it is continuously sustaining about 2580, 2570 kind of trajectory, which is a clear indication Reliance is also showing a strong strength at current levels. So putting it all together, it looks like we are heading towards 17,800 in the short term, but the way positioning is happening, it looks like 18,000 is what one can expect in next couple of trading sessions in Nifty. And as I mentioned, to support it, I think Bank Nifty is something which looks more promising, and where we are going to see some strong outperformance coming in Bank Nifty as compared to index. So there, I think the Bank Nifty is poised for a move towards 40,000 kind of trajectory. And ICICI Bank has already hit a fresh all-time high, whereas Bank Nifty is 8 to 9% away from the previous all-time high. So I think a lot of other banks like Axis or HDFC Bank is going to contribute to the rally in the Bank Nifty.
All right, so looks like 18,000 soon on the cards, supported massively by the banking and financial space. Let's talk about pharma as well, because two stocks that are going to be in focus today, most likely going to be Aurobindo Pharma and Apollo Hospitals, both of them earnings candidates. Aurobindo has seen profit decline by 32% because of lower other income, lower operating income. Revenue was up about 9% It's the US formulation business which aided support to the top line, whereas the Europe business was a tad weak. It fell more than 2% as well in the quarter gone by. So let's talk about Aurobindo first. Of course, the pharma pack has been a bit of a laggard, a bit of a underlier in the recent market recovery also that we've seen. Talk to us about the way forward for this company. How does this look?
So, Karunya, we have been consistently, avoiding Aurobindo Pharma for last couple of years. We have seen a lot of degrowth, and within this sector, we have a preference towards, Sun Pharma and Cipla as a structural bets, and specifically, Sun Pharma, which has underperformed in the last many years, is showing very strong signals in the last 5 to 6 months. And obviously, with the specialty business doing well, and the growth is going to come out of the specialty business, we expect Sun Pharma to do a strong outperformance within the pharma basket. And for the domestic play, I think Torrent Pharma is something which looks quite promising to us, where we think the stock is poised for a fresh all-time high towards 1650, 1700 kind of trajectory. So given a choice, I think I would like to take a bet on Sun Pharma and Torrent Pharma, and avoid Aurobindo Pharma in the pharma basket.
Okay. What about Apollo? That's also inching back to its highs that it saw back in the month of April. Good time to perhaps look at this counter?
Yes, definitely. In fact, the entire hospital space is looking quite promising, and we are seeing that this space, the model is shifting towards asset light business model, and which is a key trigger for increasing the margins or EBITDA margins in the businesses, and that will eventually lead to a lot of re-rating happening in the space. Obviously, Apollo Hospital in the large cap looks quite promising, and we have already seen a good profit booking from 6,000 levels to almost 35, 3,600. Now there is a recovery phase which is happening. So it looks like, technically the stock is poised for a move towards 4,800 kind of trajectory. On downside, 4,200, 4,250 is going to be a key, support area for the stock. Recently, Apollo Hospital has done one acquisition in the NCR market, and they don't have that kind of strong presence. So now, with this acquisition, there is quite of positive talk that but this particular region also, Apollo Hospital is trying to do well. So I think Apollo Hospital, and then in the cash segment, Narayana Rudralaya is one stock which looks quite promising. Very strong set of numbers company posted, and the surgery mix is improving, where and in surgery mix improving will lead to margin expansion. So I think Narayana Rudralaya is a preferred bet in the hospital space. On upside, I think 750, 780 is what one can expect in Narayana Rudralaya, and stock has formed a good support around 650, 660 zone.
Okay, so if you're looking at the hospital space, Apollo, and not just Apollo, but Narayana is also looking like a good bet. Let's shift gears and talk about some news developments as well. Balaji Amines, one of the stocks that could be buzzing in trade, its arm, Balaji Specialty Chemicals, has filed a DRHP for an IPO, and this is something that they want to do. They want to issue fresh shares worth 250 crore rupees and OFS of 2.5 crore shares as well. So this news could keep the stock in the limelight very much today, and Balaji has seen a very strong run up this entire year so far. If you look at the 6-7 month chart, very, very strong, trading at its multi-month high levels. Talk to us about what do you forecast?
Yeah, so currently I think this is one stock which has outperformed 2020. The stock used to quote at 700, and from there it moved to almost 5,200, obviously driven by a very strong turnaround in the operating profits and return ratios. After hitting a fresh all-time high of 5,400, this stock has been consolidating for last at least I would say 7-8 months, and has formed a very strong base around 3,100 to 3,200 kind of trajectory. It looks like the stock is poised for a fresh move towards 4,000 to 4,200 kind of trajectory, and I think in the immediate short term, 3,550 is going to be a very strong support zone. But technically, it looks like stock is poised for a strong move towards 4,200 kind of trajectory.
Okay. And the last stock on our list, as far as stocks and news is concerned, is Sterling and Wilson. Their promoter Shapoorji Pallonji wants to sell 1.25% stake in the company via OFS. This is going to take place between today, August 12th to August 16th. They want to sell up to close to 24 lakh shares in the company. The floor price of the offer will be 270 rupees a piece. Talk to us about Sterling and Wilson, and do you think one can look at this as well from a trading standpoint?
So currently, since the time the stock has come, on the in the post listing, we have been witnessing a lot of concerns and a lot of governance issues earlier were faced, and then the stock corrected. Despite the kind of sector tailwind, this stock is into, we are not seeing a reasonable strength coming into Sterling and Wilson. So I would like to see some better trade formation, better clarity in terms of our technical setup. But at this point of time, only thing which I can say is that around 275 there is multiple support zone. So till the time the stock does not breaches 275 on downside, one can expect stock to consolidate between 275 to 200 kind of trajectory. But it's a avoid from a trading perspective till the time we don't see much more clarity on the medium term chart frames.
Okay, Ashish, request you to stay on with us. I want to bring on board my colleague from Moneycontrol, Aparna Iyer. She has been tracking a very interesting story about why investors are still not confident about investing in affordable housing HFCs. Aparna joins us with more details. Hi, Aparna. I was looking at your story and some numbers thrown out from Care Ratings report. The affordable housing market has grown a fair bit last 2 years. This year as well, it's likely to clock in an 18% growth according to Care Ratings. Why is it not able to win the confidence of investor community when it comes to stocks like Aavas Financiers? There's also Aptus Value and several other names which operate heavily in this affordable segment.
Thank you, Karunya. So when you mentioned, the affordable housing market has been a key growth driver for the housing market as a whole, ever since the government started with the Housing for All push. The Care Ratings report mentions that 20% was the growth seen last year, FY22. And the expectation is that this year also it will be something similar, 18 to 20%. Now, this is much faster than the overall housing home loan growth for banks, which is around 13%. And for HFCs, it is around 11%. So you see that affordable housing has been a key driver for growth for most of the lenders. Now, some of these lenders are specifically focused on affordable housing, like Aptus, which got listed last year, Aavas Financiers, there is Home First, there is Repco. But what we have seen in the past, at least this year, since January, is that shares of these companies have fallen by a huge 15 to 30%. And if you see other players like LIC Housing, PNB Housing and Canfin Homes, their shares have fared fairly well compared to these. There has to be certainly some real concerns about investors why this is happening. One of the main issues is that we are at a rising interest rate cycle. The HFCs or housing finance companies like Aptus, Aavas, and for that matter, even larger ones depend heavily on banks for borrowings because they can't access public deposits, and they depend on the debt market to raise money from through bond issuances. Now, in a rising interest rate cycle, what happens is that bond yields go up, banks increase their lending rates. So the cost of borrowing of these companies is going to increase. In fact, it is already increasing and putting pressure on their margins. That is one. The second is that these companies, specifically, as we said earlier, specifically focus on affordable housing. Now, the underlying growth for this market is definitely optimistic. It's still expected to grow about 20% this year. But since the segment of affordable is, especially Aptus and Aavas and these companies cater to, are a little more vulnerable to interest rate, increasing interest rate cycles. So asset quality also comes under pressure to some extent, not to a great extent, but to some extent definitely. So there is a concern that these companies might start reporting a higher level of delinquencies as we go forward in this year and the next. So these are the two major concerns that investors seem to have and that analysts have highlighted in their reports.
I wanted to ask you about the share prices as well, because if you look at the names which you were flagging off, Aavas, Aptus, Repco Home Finance, These are down anywhere between 15 and 30% year to date, whereas their larger peers, LIC Housing, PNB Housing, Canfin Homes, they have done fairly okay. Are valuations also a concern because almost, these companies are on par with the likes of HDFC, which has a much more, solid book?
That is actually, like I mentioned, when investors had these concerns about interest rate cycles, impact on their margins and asset quality, what they feel is that the valuations at which these shares trade are not really warranted when these concerns are put in place. Now, imagine that if you are an investor, HDFC is by far the largest home loan lender, non-bank home loan lender. After the merger, it will obviously become part of HDFC Bank, but still, LIC Housing is also a decently sized home loan lender. They also have affordable housing book. A part of their loan book is towards affordable housing. So HDFC shares are trading somewhere around 3.5 times its price to book, its book value for FY24. Aptus and Avas are trading around 4.5 times. Now, if you are an investor, it makes sense for you to take exposure to a well-branded, large player where the risks of interest rate cycle or asset quality is not that pronounced. And we know that HDFC has had a track record of amazing asset quality. So why would you not take exposure there rather than take exposure to smaller companies?
Right.
You should note at this point that Aptus, Avas, Home First and all the other affordable players are actually, if you go by market share, they are hardly 1 or 2% of the overall housing market because they are very small players. So yes, valuation is the main concern, it looks like.
Okay, thanks for flagging that off, Aparna, and thank you for joining in with that update. Back to Ashish Chaturmohta once again. Do you like any of these HFC names going by the technicals and the fundamentals, which, Aparna was also flagging off? Any names that look attractive?
At this point of time, within the banking and financials, currently our focus is mostly on banks. And if we have to switch our focus from banks to, let's say, financial to NBFCs, then the only stock which we like is Cholamandalam Finance in this entire trajectory. First, because we believe that the auto cycle has reversed, after many years of degrowth, and with the quality of work and the kind of consistency Cholamandalam Finance has been providing in terms of numbers, I think this is one stock which looks very promising within the NBFC basket. As far as housing finance is concerned, we are still not sure about the technical setup of these companies, but definitely fundamentally we like stocks like Canfin Homes, HDFC Limited, obviously, and we would like to take a bet within these names. But Canfin Homes is still not showing very strong technical setup. We need to see a crossover above 620 to happen for any serious reversal of trend in the name.
Okay, let's also address some of our viewer queries. We're running out of time, so won't be able to take too many. But first one is on Tata Power. Can you tell us how the chart is looking like? Because after a steep fall late last month, it has seen some recovery from those levels. But with 230 on its, is where it shut shop yesterday. Tell us, could it build on to that momentum?
Yes, so I think the stock has been consolidating for last couple of weeks. Maybe the trigger to buy will come only about 235, but the overall setup looks promising. And I think if one buys before 235 doesn't mean that the stock is weak. The only thing is that the momentum is missing. So maybe you have to really wait for reasonably good period of time for any serious uptrend to start. But if you want to enter into momentum and want to see the money getting made in the short to medium term, then 235 is a trigger point. Once it crosses, then I think stock is poised for a move towards 265, 270 kind of trajectory. On downside, I think stock has formed a strong base around 220, so that's going to be my stop loss for going long into the stock. But overall bias is positive in Tata Power. The only missing element is the momentum.
Okay. Talking about momentum, I want to bring out GNexis as well. Rajesh, one of our viewers, has written to us. He also wants your view on that. Good momentum seen last few days. Can the run rate sustain?
Yes, I think, because as I mentioned about auto cycle, we are very positive on the auto recovery. And if auto is going to do well, then auto ancillaries is one space which is going to see a much better momentum. And just to give you a perspective, GNexis made its all-time high somewhere around 1100 kind of trajectory, and the stock is now quoting at 655. So good, almost 50% kind of correction has already been witnessed. And in the last few weeks, there is a very strong base formation which has happened in GNexis. So I think GNexis is looking very strong on the weekly and monthly chart frames. With 625, 630 as in trading stop loss, one can initiate a long position in GNexis. I'm looking for a target of 750 to 780 kind of trajectory. So good 12 to 15% kind of upside can be witnessed in GNexis from current levels.
Okay. What about your own stock ideas? What are the names that you're keeping on your radar?
So currently, as I mentioned, banking is going to lead the rally. So within that, we have been talking about ICICI Bank for almost now 6 months, and stock has delivered very strong set of returns. Now, if you have to see a catch-up rally within the banking basket, I think it's Axis Bank, where we have seen the stock, continuously underperforming ICICI Bank. And as I mentioned, Bank Nifty is still 8-9% away from its all-time high. So I think Axis Bank can start contributing from current levels, and this is what we witnessed in the last 3-4 trading days, volume activity as well. So with 745 as a trading stop loss, one can initiate a long in Axis Bank. 800, 820 would be my short to medium term target in Axis Bank. The second bet is on PI Industries. So PI Industries is quoting around 30 to 90 trajectory, and I think technically, obviously, my stock has seen a massive breakout on the weekly and monthly chart frames. And with the recent con call, company has clearly mentioned earlier they guided for 500 crore kind of capex in financial year 23. That has been raised to 650 crores. And the 16% growth which we witnessed in financial year 22 in terms of revenue is expected to be about 20% in financial year 23. So I think there's going to be a good momentum on earnings growth, good momentum on the capex growth, and the same is expected to be seen on the technical chart frames of the stock. So with 3150 as a trading stop loss, I think PI Industries could be bought. My target is a fresh all-time high can be seen in the stocks, which was around 3550, but I'm expecting stock to see 37,3800 kind of trajectory in the next couple of few weeks. So PI Industries is my second bet in the agrochemical space, and I think consumption is looking very strong as a theme. So whether it's QSR, whether it's retail. So within that basket, I think ABFRL is one stock which looks quite promising. Stock has closed around 291 in the yesterday's trading session with 280 as a trading stop loss. I think this stock also can be bought. On upside, 330 would be my positional target, which is good 12 to 15% kind of upside, which can be witnessed in ABFRL from current levels.
Okay, so PI Industries, Axis Bank and ABFRL. Thank you so much, Ashish, for flagging off your picks and sharing your views on the market with us today. With that, it's a wrap on the show. Thank you for tuning in.